We're at REIT Week 2010 in Chicago, and I'm joined by Mark Decker Sr., Managing Director and Head of the Real Estate Group with Robert W. Baird. Mark, let's talk a little bit about the capital markets. What's your overall view of where they are now, and do the looming debt maturities give you any reason for concern?
The industry, because it's public and because there's transparency, has been aware of the credit issue, and the companies have really proactively addressed that with the banks. I think it's more of a problem on the private side, where there has not been that openness and that awareness, nor the requirement that you really have to deal with it. So the public markets have also been historically much lower levered than the private markets. So the nature of that concern and the nature of that debt rolling is definitely less of an issue in the public markets, because most REITs are in the 40 to 50% leverage, and their private counterparts are more in the 60 to 80%.
And what is your view currently of publicly traded REITs versus other forms of commercial real estate investment?
I'm a big fan of the public markets generally. I think some of the historically quality REITs that have existed, the Federals, the Washington REITs, the Weingardens, proved that model pretty well. And then the Sam Zells and Steve Roths and some really great companies, Barry Sternlicht, and many others have come in and adopted that model. I think the REIT is a very tax-efficient structure, and I think the transparency that you get in the public model and the liquidity you get in the corporate governance, institutional shareholder services that does a lot of proxy voting for institutions, I believe ranked REITs as second to utilities in terms of corporate governance. Certainly an important issue, and I think those three things, transparency, corporate governance, and liquidity, increasingly are important to investors, and we score high there.
And there's debate in the industry about the use of at-the-market offerings. What's your opinion?
It's a great question, and it's an interesting debate, and we're in favor of it. It's just another capital arrow in the quiver of REITs to raise capital. I think it has a place. It's not going to replace a common offering. It gives the REITs management the flexibility to sell a little bit of stock when the market looks good for them, and they can kind of pull the trigger and go. And over a 12-month period, it can be a meaningful amount of stock sold, and so I think it's a good thing.
Mark, thank you very much for joining us.
And Matt, thank you.
For REIT.com, I'm Matt Bishar.